The next classification of financial markets is capital market. So capital market is also an organized market. The organized markets are the markets where financial transactions are carried on as per standardized rules and regulations. So money market was also an organized market. Now we will study about capital market. So hello students and welcome to the class of financial markets and institutions, and we will be studying about capital market in today's session. So what is a capital market? A capital market is a market where long-term funds are lent and borrowed. So capital market refers to all the facilities and financial institutions arrangements for borrowing and lending term funds. Term means medium and long-term funds. Therefore, it is a market not for dealing in capital goods but for dealing in long-term securities which have a long maturity or indefinite maturity period. So, capital market helps to raise funds for investment purpose because it helps in borrowing and lending for long period or huge amount of time. It gives huge amount of time for the borrowers and investors. Therefore, capital market securities or long term securities are used for investment purpose. So, capital market is also similar to money market because it is also composed of those who demand long term funds, that are borrowers, and those who supply long term funds, those are lenders. So, the demand for long term funds arises from the borrowers, and the supply is from lenders. Therefore, it is similar to money market, where because money market also operates on demand and supply of funds, that is, it operates on the basis of activities of borrowers and lenders, and money market also operates on the activities of borrowers and lenders for long term funds. And the demand for long term funds comes from private sector manufacturing industries and agriculture and from the government. So the borrowers of long term funds are private sector manufacturing industries and agriculture and also the government, and largely for the purpose of economic development. So capital market helps in economic development, and the supply of long term funds largely comes from individual savers. These are the investors, individual savers, corporate savings or business people who business savings, banks, insurance companies like life insurance company, general insurance company, and other specialized financial institutions are the investors in capital market. Thus, capital market is the market for financial assets which have long indefinite maturity. So, the maturity may range from 1 year to 15 years, 20 years more, okay, any indefinite period or infinite period. So, capital market offers an ideal source of external finance. So capital market helps in getting finance externally, and it is an important part in a country's financial system. Goldsmith defines capital market as the market of a modern economy has two basic functions. First, the allocation of savings among users and investors, and the second, the facilitation of the transfer of existing assets, tangible and intangible, among individual economic units. So Goldsmith says that the capital market has two important works to do, or it performs two important functions. The first one is allocation of savings among users and investors. So it helps in allocating the savers among borrowers and lenders. So it takes the money from the lenders and gives it to borrowers. So it helps in allocating or assigning or transferring of funds from the investors and users, or users in the sense borrowers. The second work of capital market is facilitation of transfer of existing assets, both tangible and intangible assets, among individual economic units. So it helps in transfer of assets from one person to another person, or from one institution to other institutions. Okay, next definition is Grant defines capital market in a broad sense. That is, capital market is a series of channels through which the savings of the community are made available for industrial and commercial enterprises and for public authorities. It embraces not only the system by which the public takes up long term securities directly or through intermediaries, but also the elaborate network of institutions responsible for short term and long term lending. So he says that capital market is a collection or a chain of channels through which the savings of the community or of the nation or of the country flows from one sector to other, or the funds or the savings are made available for industrial and commercial enterprises or business houses to raise funds, and also it helps in economic development. Okay. Next, functions of capital market. So what are the functions of capital market? First one is mobilization of savings. So capital market helps in mobilization of saving. The most and primary function of the capital market is, that is, mobilization of savings for capital formation and also economic development. So capital market helps in mobilizing savings from the households to the producers who are the investors. So it helps in allocation of savings from the individual savers to the producers or the business units who require funds. So it helps in transferring of funds from the lenders to the borrowers. The borrowers may be any institution, government or private sector manufacturing units, and the investors may be individuals or banks, etc. Okay, so it helps in transferring of funds from the investors to the borrowers, okay, or from the lenders to the borrowers. It provides intermediation between savers and investors on a long term basis. So capital market helps works as an intermediary or a binding block between the borrowers and the investors. It both connects the borrowers and lenders, or it operates between the borrowers and lenders, or it transmits information between borrowers and lenders. And the next function of capital market is provision of investment avenue or provision of investment facility. So the capital market provides various institutions or ways for the investors, particularly the household sector, to invest their savings in such financial assets that are more productive than physical assets like land and building. So capital market helps the investors or the savers to make a better investment. It creates opportunity to the investors, which helps in gaining or receiving more profits rather than investing in land and buildings. So if capital market gives better ways of raising funds, or it helps in better ways of increasing the saved amount with higher returns. It creates opportunities, or it creates a platform where investors can invest their funds or their saved amount in the financial assets where the gain is more, or where the earning is more, or the returns are more, rather than investing in land and building. Okay, next is proper regulation of funds. As the capital market serves as an important source of productive use of savings of the economy, it helps in mobilizing the savings of the people for investment purpose, and also it helps in avoiding wastage in unproductive use. So capital market helps the saver to avoid wastage of funds, or it creates a proper way to invest funds with higher returns and reduces the risk of loss. And the capital market is well controlled by RBI and SEBI, and it has a proper way of working because it is an organized market. It works under proper set of rules and regulations, and there is no risk of loss. So there's, to some extent, there is a risk of loss, but there are no cases, there are lesser or reduced cases of frauds. Therefore, with capital market is controlled with proper rules and regulations, and therefore the investment does not lead to fraudulent. Okay, so therefore proper regulation of funds helps in higher returns and less loss. Next is capital formation. Another basic function of the capital market is to direct the flow of funds to high yielding industries. So, the investment or the saved funds of the investors are invested in high yielding or highly performing industries, and strive for balanced and diversified industrialization. It channelizes the allocation of the funds from less profitable channels to more profitable channels. So instead of investing in savings bank account, so people can invest in capital market, which gives higher returns than savings bank account. So that saved amount is invested in high productive industries. So industries get funds, and with those funds the industries will produce more, and the income for the company and also for the economy increases, and it leads to economic development, and also it helps in forming the capital for the industries. So as the industries to perform its activities requires funds, so the investors can invest in the securities with the help of capital market, and those industries can use that funds and earn profit, and that profit is in return given back to the investors as the return for their investments. Therefore, it increases the capital for the industry as well as in the economy, and thus it leads for optimum utilization of resources. It enables the idle and surplus. It uses the idle funds with not working funds into making proper returns. Therefore, it creates capital. So it helps the companies to raise funds. Okay. Therefore, capital is found. Next is speed up economic growth and development. As the capital market is very important for a country for capital formation and its economic growth. Therefore, if capital market is not exists or does not exist, there would be no capital formation and no economic development. So the resources of the country would remain unused. Therefore, the importance of capital market increases because it helps in speedy development of the economy, because the capital market provides incentives to savings and facilitates capital formation. So the investors will get returns for their investments as interest. Okay, so therefore it helps in attracting investments, or it helps in attracting savings. Next, the capital market also helps in productive use of savings. So it mobilizes the savings into investments, and that invested funds are utilized for increasing the production activity. So it helps, the funds are used to buy raw materials, to for the to buy, to give salaries, to for, and other day to day expenses are met with the capital, and it helps in production. So that fund, those funds are used in productive activities or production activities. And if the production increases of the factory, and it increases profit, or it also increases income. So if the income increases, thereby total production, and it enhances the welfare of the society. If the production increases, earning increases. And earning increases, level of living also develops, and it leads in the development of economy, as the earnings are distributed among the nation, with increase in the level of spending of the individuals, and also the level of spending increases among the business firms or factories. Therefore it leads to the flow of funds in the economy increases, and leads to development of economy, as the earning of a company or a manufacturing industry or an individual or the whole nation increases, the spending level also increases, and the funds flow in faster, the funds flow faster, and the funds are utilized in more better productive ways, and the technology, infrastructure, lifestyle are developed in a country, and therefore it leads to economic growth and development. Next is continuous availability of funds. So capital market provides, so it works in creating of funds, allocation of funds, transfer of funds, and utilization of those funds for better productive uses. Therefore, so capital market helps in continuous flow of funds or availability of funds, as it collects it, as capital market collects funds from the lenders, and it gives to the borrowers or those who need funds. The flow is continuous, the flow of funds is continuous. So it helps in movement of funds from unused funds to productive used funds. So it helps, it uses the unused money, or it uses the idle money to bring more profits, or it helps in increasing the earnings, as it takes funds from the borrowers and it gives to the investors, and investors use that money for production and increases the level of funds. And therefore, so capital market helps in continuous availability of funds. Clear? So these are the functions of capital market.